Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar price action over the last 4 or 5 trading days, we've had a couple of attempts at that topside resistant level around 74-cent handle and rejected. Well, the market attempting to restore its bias to a positive sentiment. It is seen here from the RSI that it's backed away from the midway point, along with the decline in MACD. Investors remain cautious after the RBA governor online speech. The RBA Governor Phil Lowe challenged market expectations for interest rate hikes before 2024 after saying that the COVID Delta variant has delayed, not derailed, economic recovery. And he believes growth will be stronger again next year. He went on to say this is a major setback, but is likely to be only temporary. We expect the economy to be growing again in the December quarter, with the recovery continuing in 2022. All eyes look to this Tuesday's US inflation data, which is out Sydney time at 10:30. Markets will be a little bit cautious and also looking for a direction to see how the numbers will reflect on how the US Federal Reserve will view them, because this month the US Federal Reserve kicks off its 2-day meeting next week. That is on the 21st and 22nd. So let's keep an eye on the US inflation data that's released. In the meantime, though, looking at the technical levels, we look at the Australian dollar. The support is still there at 73.35. I do anticipate that if this pattern continues, then we will probably see a break of that level and head towards 72.80, with the short-term resistance seen at 73.75, with 74.25.65 located above. The euro took a challenge to that downside and ended posting a bearish hammer. But with the stab seeing a 2-week low of 117.70, where the support is, you can see I've outlined here at 117.60.65, the market is now showing a slight upward tick. Now the US dollar, which measures the greenback strength against a basket of 6 major currencies, also posted a 2-week high, that is at 92.88, but didn't close above the key level of 92.85. So therefore didn't confirm the bull case to the US and the bear case to the euro. However, we are still holding to a negative bias when we look at the euro. So if we can see the US dollar close above 92.85, this should set the bearish motion down towards 117.60 and then 116.75.80. Dollar yen, the brave bulls have come back to challenge this level of 110. Now we can see after many attempts, there's good supply here, and no doubt it will continue. That is from the region of 110.25.45 and the cap above, as you can see here, at 110.80. Not the most supportive bullish signals, I would say, that I've viewed from the daily time frame. However, if the bulls are brave enough, then I do anticipate yet again another rejection and maybe see another bull trap and one of these bearish candles coming through. Support seen at 109.55 to 108.70. Pound, well, we got 2 dojis, one rejecting the top side and one rejecting the bottom side. Let's see how the market plays into tonight. 3 dojis will be a tri-star and somewhat negative. Still, the technicals are holding to a positive bias, so I'm not ruling out at this stage one more challenge to that top side at 138.80. If we do see a break there, there is a squeeze in play to 139.50. Support at this stage is at 137.80. This would mean that sterling yen will eventually clear this level of 152.40. Not quite broken there yet. It's weak, but it's still holding. But nevertheless, there is a bullish trend coming through here. And also, we're getting a little bit to the overbought side of this RSI. But I'm not going to get overly excited about the break to the top side, because it still has the hurdles of 152.95.05. And then most probably find as you get closer towards this 153.50.70 area, there will be another bearish ambush. Well, we can see that when we look at gold, the market's traded sideways into the 5th consecutive day. No doubt that we're looking for a potential move once we get the release of the US inflation data. That would probably see a little bit more movement in the US dollar, keep an eye on these technicals. They are negative. Therefore, I do still support the level down to 1,770. If we see a break there, then we could see a move down to 1,748 to 54. Resistance at this stage is around 96 and then 108.06. It seems there's been some development in oil as we, first of all, Hurricane Ida has given some problems of getting the Gulf oil and gas output back into play after it was taken offline due to the hurricane. But now we have another hurricane emerging. This one is called Tropical Storm Nicholas. With these hurricanes that are coming into play and heavy wind and rain, is that further shutdown to the refinery. Now looking at the technicals though, we've cleared that level of 70.20 and now it looks like we can see a rise up towards, at this stage, to 72 cents. Likely to see this as a squeeze due to the rejection of 67.5. It's the market though, keep an eye on this. If we see some divergence coming through as the market pushes up, then we could see a snapback to the downside. But at present, due to the close above 70.20, there is a little bit of a squeeze in play. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day.